Iraq Stock Exchange, ISX, reported significant trading activity during the final week of July, even as its main indices saw a notable decline, reflecting a complex period for investors. In a statement on Thursday, the ISX detailed that it held 5 trading sessions during the week, recording more than 4,556 purchase and sale contracts. These trades involved over 3 billion shares and amounted to a total value exceeding 7 billion Iraqi dinars. Despite the high volume of transactions, the market's key indicators finished the week lower. The main ISX 60 index, which opened the week at 977.25 points, closed at 945.99 points, marking a 3.3% decrease. A similar trend was observed in the ISX 15 index, which fell by 1.99%, from its opening of 1,130.28 points to a closing position of 1,108.27 points. The week's performance, characterized by high trading volume alongside falling index values, suggests a period of active selling and shifting. Investor positions in the Iraqi market. USD IQD market exchange rates for Tuesday, August 5, 2025. Baghdad, selling $100, 140,150 IQD, buying $100, 139,850 IQD. Erbil, selling $100, 140,150 IQD, buying $100, 139,850 IQD. Basra, selling $100, 140,150 IQD, buying $100, 139,850 IQD. The official central bank of Iraq. Rate stands at 1,320 IQD to $1. Payment of dues in black oil and tightening controls at ports are the main reasons for the dollar's decline. 10 interpretations from expert Manar Al-Abidi. Economic researcher Manar Al-Abidi reviewed 10 reasons behind the decline in the dollar exchange rate against the dinar in Iraqi markets on Monday, stressing that they have collectively created an economic environment that has contributed to strengthening the dinar's value. He pointed out that these reasons range from direct economic factors, such as deflation and a decline in spending, to procedural and regulatory factors, such as tightening border controls and traders' shift to the formal banking system, in addition to circumstantial factors related to the elections and the increasing number of expatriates. The exchange rate of the dollar against the Iraqi dinar has witnessed a significant decline recently. This decline is due to a combination of intertwined economic and procedural factors, which vary in their impact, but have collectively contributed to strengthening the dinar. The most prominent of these factors are 1. Economic contraction and declining consumer confidence. The uncertainty facing the Iraqi market due to the economic slowdown has led to a decline in individual and institutional spending confidence, negatively impacting overall demand, and thus reducing the need for the dollar as a catalyst for trade. 2. Stopping government investment expenditures. The government's focus on operating spending rather than investment has slowed economic activity, since the general budget is the primary driver of economic activity, reducing investment. The performance of the Iraq Stock Exchange, ISX, in the final week of July 2025, marked by high trading volume but declining index values, sheds light on deeper trends in Iraq's financial and monetary ecosystem. This activity is particularly relevant when analyzed in the broader context of the Iraqi dinar, IQD, its value, and the nation's path toward economic and currency reform. The ISX market behavior is not an isolated phenomenon. It reflects the underlying sentiments of investors who are navigating an evolving fiscal, monetary, and political landscape. Understanding how this recent trading activity connects to the value and trajectory of the Iraqi dinar requires examining market psychology, policy reforms, the Central Bank of Iraq's CBI monetary direction, and broader de-dollarization efforts. ISX market sentiment versus dinar confidence. The fact that more than 4,556 trading contracts were executed in a week, involving over 3 billion shares and exceeding 7 billion Iraqi dinars in value, is a sign of liquidity and active investor participation. However, both the ISX 60 and ISX 15 indices declined by 3.3% and 1.99%, respectively. This reveals an underlying mismatch between trading volume and investor confidence. High volume during falling indices is typically an indication of repositioning. Large investors may be exiting certain equities, reallocating capital, or hedging against perceived risk. One of the key risks in Iraqi markets is currency volatility and lack of clarity about the direction of the dinar's exchange rate. Over the past several months, the Central Bank of Iraq, CBI, has undertaken aggressive reforms to narrow the gap between the official and parallel market exchange rates of the IQD. These reforms, while critical in stabilizing the currency, have introduced uncertainty for companies whose earnings are directly or indirectly linked to dollar-based transactions. For instance, firms dependent on imports, foreign remittances, or offshore accounts may face tighter compliance requirements and reduced access to US dollars, impacting their profitability and appeal to investors. Exchange rate policy and stock market impact. The exchange rate of the Iraqi dinar directly influences investor behavior. On the ISX, if there is speculation that the dinar may appreciate due to revaluation or successful monetary policy, domestic investors might shift out of equities and into dinar-denominated savings, land, or gold to preserve purchasing power. Conversely, if fear of devaluation spreads, investors may seek refuge in blue-chip stocks or foreign currency accounts. The fall in indices, despite high trading volumes, could therefore reflect either profit-taking after earlier rallies or deeper concerns about corporate earnings under a constrained currency system. What makes this week especially significant is that it comes at a time when Iraq is showing signs of macroeconomic transition, moving from a cash-based, dollar-dependent system. As of August 2025, Iraq has not officially changed the global currency exchange rate system, but it is playing an increasingly significant role in influencing regional and global discussions about monetary policy, currency stability, and de-dollarization. The idea that Iraq has changed the global currency rate exchange is often misunderstood or misrepresented. What is actually happening is that Iraq is making a series of economic and monetary policy adjustments, backed by the Central Bank of Iraq, CBI, that align with international financial reforms, contribute to the narrowing of the gap between official and parallel exchange rates, and push toward a more sovereign and independent financial system. These changes are being interpreted by some as a precursor to a broader global currency shift, particularly in the context of ongoing global economic transformations, including de-dollarization trends, multipolar financial systems, and gold-backed asset models being explored in different regions. To understand Iraq's impact on currency exchange and its potential influence on global financial dynamics, it's essential to examine the country's actions on several fronts. First, the Central Bank of Iraq has been actively pursuing a managed float exchange rate regime since early 2023, where it gradually adjusted the official USD IQD rate from 1,460 to 1,320 dinars per dollar, and then introduced strict currency controls to fight corruption, smuggling, and speculation in the parallel market. These efforts were supported by the United States Treasury and the Federal Reserve Bank of New York, particularly with the implementation of the electronic foreign currency auction system, the platform, which tracks all foreign transfers from Iraqi banks to ensure compliance with global anti-money laundering, AML, and counter-terrorist financing, CTF, regulations. This level of digitization and surveillance has reduced the supply of physical US cash dollars in Iraq and increased reliance on official transfers for trade and imports. As a result, the parallel market rate has narrowed from over 1,600 IQD USD in early 2023 to around 1,400 IQD USD by mid-2025, signaling better monetary discipline and stronger alignment with international standards.